Squeeze is on, ladies and gentlemen, and the battle for Bitcoin's price for the year of 2020 begins right now. New Year's Eve 2019, following a $100 short squeeze to the upside, it seems that the dominant trend has been determined by the market. Meanwhile, tomorrow, if Craig Wright is to be believed, come tomorrow, he will be the possessor of the private key to 1.1 million Bitcoin. Also, did Libra just get kicked out of Switzerland? I mean, I know crypto moves fast, but the Facebook honeymoon's already over? All this and more in today's exciting episode of Breaking Bitcoin.
Hey, I'm Cap.
I'm Carlos.
And we're with Particle.io, and this is Breaking Bitcoin.
Hey guys, welcome to Breaking Bitcoin, your daily source for market updates, sentiment, and news for professional and retail traders. My name is Justin Wise, lead analyst and senior mentor at KrakenCryptocurrency.com. Today is New Year's Eve 2019. Hopefully you guys are doing absolutely fantastic wherever you happen to be tuning in from, and whether you're watching us from across YouTube, Twitch, DLive, Facebook Live, or on Roku with the Investor News Channel app. It's a new year. Starting tomorrow, guys, a new year and a new decade, just months before the halving event for Bitcoin. And I just want to say what a wild ride of a year 2019 has been, ladies and gentlemen. It has been an honor and a pleasure to trade with you, to bring you guys the news, to run the group, to do all the education that we do, to shoot all the videos that we've done, to be here consistently just about every single day, breaking down the markets. It has been a fantastic and wild ride. And I want to thank you guys so much for supporting us, for bringing us to this level. Just hit 7,000 subscribers here on YouTube yesterday. We're growing pretty quickly over on DLive as well. So thank you guys so much for the support, and really looking forward to today. We've got a very exciting day in the market today, so I want to get to that as quickly as possible. And, honestly, over the last month or so, been incorporating more of what I would say would be my classical order flow strategies into my trading. And I think the members have been pretty happy with that as well. Just being a little bit more active in our trading. And because of that, we've been able to catch moves like today. And we're going to break that down when we get to the segment. But we're able to profit off the movement to the upside. We were able to get into the short right exactly where I said we wanted to yesterday on confirmation of the trend flip, which occurred around 7,200. Actually, 7,211, I do believe, is where we got filled. And things are good. Unfortunately, we've broken that critical level of support. And kind of the question on everybody's mind is, how low can Bitcoin go? Obviously, we have price targets, but we'll be looking at the daily, the monthly, the weekly, and kind of looking at where this movement will go. I will say, however, that in my experience, we've never gotten that wick, and we'll kind of point out that wick here in just a minute. But that huge, short squeeze to the upside, followed by a bearish close, that does not result in some significant downside. About 4.5% on average, although it can vary from 3 to 7%. And then, of course, you can take in some variance on that as well, because of course then you can look at the higher time frame trends as well, and of course the monthly, the weekly, the daily, all trending to the downside, the daily and consolidation. So as far as daily strategy, still reversion to the mean with a bearish bias because of the weekly and the monthly. However, on the lower time frames, and as far as activity goes for today, the volatility is amazing, again, as it sometimes is. And this is the thing about Bitcoin. These levels can be punishing for people, for those who aren't patient. They have to pick their directional bias. They have to be willing to be wrong on a trade. They have to let the volatility play out. And not really the volatility, they have to let the lack of volatility play out because theta will decay. Theta will decay as you're waiting for a movement, and then gamma spikes. And for those of you who are familiar with options trading, you'll understand these terms, but essentially volatility spikes toward the end of a contraction period. And that's exactly what we saw just now on the lower timeframes. But anyways, all this and more, we're going to break all this down. We're going to talk about Libra. It seems that Libra just got kicked out of Switzerland, or Switzerland is kind of giving Libra the au revoir. I don't think that's what they speak in Switzerland, but you'll forgive me. I'm not an expert on foreign languages. And also we're going to be Craig Wright. I've been a pretty vocal critic of his, as well as Bitcoin Cash and Bitcoin Cash SV. But tomorrow, if everything that we've seen occur in 2019 with this whole Tulip Trust drama is to be believed, then come tomorrow, supposedly by bonded courier, Craig Wright will be in possession of the private keys to 1.1 million Bitcoin. That's about $8 billion. And that's significantly enough to move the market. Now, according to Climate Estate, they will not be dumping that Bitcoin on the market. But, one thing that I've learned in my life is that, you never put your well-being, you never bank your well-being on the benevolence of another, on the assumption of the benevolence of another, because people tend to act in their own self-interest. But we've got a fantastic show for you guys today. All the links are in the description to everything you could possibly need if you're interested in signing up for the group. If you're interested in using our tools and learning our rules, all of that information is down below. Before we begin, I want to thank Coygo for sponsoring today's show. Many of us in the cryptocurrency game are, of course, going to be managing exchange accounts on multiple exchanges. You're trading on Bittrex, you're trading on Binance, you're going over to Huobi. God forbid you're going to something like HitBTC, but you're going to all these different exchanges, especially if you're trying your hand at arbitrage or you're trying to monitor real-time data. You've got a lot of markets, a lot of charts, and it can quickly become overwhelming. Thus, the need, if you are going to do this beyond any form of passive investment, then you're going to need some professional tools. Our friends over at Coygo have developed a good turnkey solution to managing multiple exchange accounts from your desktop securely. Coygo's app, you can download it to your desktop. The link is down in the description. You can go to coygo.krakencryptocurrency.com. It's absolutely free. We don't get any money from you clicking on that link. It's just to track. But you can download. The app is in the beta phase right now, so they'd appreciate your feedback to make the app better. You can quickly move. You can connect all your accounts. You can exchange funds between your accounts. That allows you to grab arbitrage opportunities in real time. You get real-time order book data. And the best thing, which fits with my not your keys, not your coins philosophy, is that nothing is stored on Coygo servers. You don't give them your API keys. That is stored locally on your machine, encrypted. So word for them, make sure to go check them out at coygo.krakencryptocurrency.com. And we're going to get into whipping these bulls into shape in the market breakdown.
Do you trade cryptocurrencies on multiple exchanges? Coygo is here to help. View real-time insights, including trade analysis, order book superiority, arbitrage scanning, and more. No API keys required. Want to trade, transfer between wallets, or track your portfolio across exchanges? No problem. Just connect your API keys. They're only stored securely on your machine. Coygo servers never have access to your cryptocurrency accounts. Sign up now at coygo.app.
All right, I also want to thank, of course, our continued friend of the show, today's crypto comment giveaway sponsor, Spectre Security Coin, because we do give away some crypto on this channel every single day. And yesterday's video was Bitcoin's once-in-a-lifetime buy signal just activated, crypto censorship on YouTube, and MetaMask ban. We have 8 commenters, so we're going to randomly pick a winner from yesterday's video. And Computer Tech Tutorial says, DMX, is that a new crypto? Yes. X going to airdrop it to you. Yes, it is. Get hold of me in the Discord, my friend, and I will gladly tip you some crypto. Thank you so much for the support. If you guys would like to be entered for a chance to win 8,000 XSPC Spectre Security Coins, then simply leave a comment below today's video on YouTube. All right, into the markets. All right, and here we are. And yes, I agree. This does look ugly. So where to begin? All right, let's start off as we typically do. Let's just get right down and kind of look at the intraday volatility, and I'll show you guys kind of how we played this today with the use of tensor charts, something that we utilized, or I utilized anyways, this morning in my trade setup, as well as aggregated trade, which is aggregating all order book flow data, which I really like. These two, for those of you who are going to try your hand at order flow trading, there are a few other tools out there like ATAS. I believe Bitcoin Trading Challenge has done some videos on that and explained that pretty well. I've never used ATAS, so I'm not familiar with it. I don't really know if it's something that I need. I think that tensor charts, which is free to utilize for anything that you guys would want to do. Of course, it's pretty cheap too. I think it's like maybe $5 to $10 a month, maybe a little bit more. For if you guys want to unlock their advanced features and to get something like the BitMEX stats, all you have to do is log in with a free account. But anyways, and that you can get liquidations and BitMEX stats and open interest and things. You can get that, of course. Free on scalpxindex.com, which we've showed on this on this before. So kind of the nice thing about trading cryptocurrency is that you have access to a lot of advanced tools right now for free for many traders that you're not going to get in traditional markets, like Bloomberg terminals and all of these things. You really do have to pay quite a bit of money for to get this kind of order and information aggregation. So anyways, having said that, let's get over into the charts and just kind of break down raw analysis here. So as we left yesterday, we were in a long position with a stop at 71.50, right? The stop at 71.50. And this idea to reverse direction around 7,200 if the order flow or if the volume was good enough. Now, that's not actually what we did. We didn't exit the trade yesterday because we were just holding that level of 7,200. There was no decisive move to the downside. I went to bed last night around 10 o'clock Central Standard Time is when I went to bed. And it, with the market not moving very much last night and just oscillating between the 7,200 kind of point of control level, not significantly breaking it, not closing any hourly below it, there wasn't really a lot to do. I wasn't going to exit the trade. I already had my directional bias. I already had my trade set up, and that's just kind of one of the skills or the habits that you have to discipline yourself into, because you can faff around. You can keep, one of the common problems is that people will faff around and they'll go down to lower and lower time frames and they'll look for some sort of justification to either reverse direction if they are dealing with decaying theta or decaying gamma, meaning that volatility is drying up when you're waiting for a movement, and that can often be quite annoying. But that is, if you'll notice how Bitcoin often moves in ranges, you'll have long drawn out periods of low volatility followed by a pop. And if you're not patient, you miss the pop and you miss the profitable opportunity. So anyways, having said that, so we held the long open last night. I woke up early this morning. I was up about 6:30 this morning. That's a little bit later than I usually get up. But anyways, I was up. It's kind of my daughter woke me up this morning. That's a funny story. But anyways, moving right along with that. When we were watching, I was watching aggregator trade, just kind of doing my morning work, doing my morning analysis. And we saw the volume come in. We saw the volume coming quite significantly. And more important than that, we didn't, aggregator trade helped with this. But if we go to the hourly, and this is what I pointed out in my analysis. Now you can't see it now because the candle didn't actually close this way. But this candle right here, this bear wick candle, this death to the bears candle, which really, death to the bulls candle, to be quite honest. This stop loss hunt to the upside, this short squeeze. At the point where it was generated, you saw that on the previous candle, we were already Parallax was. This is kind of my analysis. Parallax was moving toward finally flipping bullish, and we can kind of zoom out and see this. Parallax has been bearish for quite a while, dipped down into the oversold territory and did recover. There's also a little bit of bullish div there on Parallax. But on this candle is moving to the upside, and Wadatar explosion was green, had been green for a while in this range, and then gave us a rising explosion level. And on the lower time frames, waiting for that candle to close would have completely kept you out of that trade, but that was the good sign that I wanted to see for the bullish move into the upside. So I took that opportunity in conjunction with VPSV, which again, this is one of the earliest tutorials that I have for one of my members in our premium library, in our online trading academy, VPSV scalping. But I took this opportunity when price was around, price was around 72.30, 72.40. And I managed risk at 71.50, because that stop was so tight that allowed me to dramatically increase my position size without outsized risk. So I ended up averaging my entry down to about 72.20. And I set our first initial, let me actually go look at my sheet. We only hit the first take profit on that. Let me look at my sheet. Yeah, so we went to 3% risk at 72.29, was the averaged entry. And the first take profit was 72.95. Now we were shooting for 73.85 and 75.70 because at that point, the volume looked really good. There was very aggressive market buying coming into the market. So we took the trade to the upside, filled at 72.95. And then I was looking for the, big sell-offs on AgriTrade, which is what I'm always kind of watching for trend reversal, but that's not what happened. We did see that come in a very significant way, but not in very large chunks. Is 1.5 million here, 500,000 here, 2.2 million here. It wasn't 8 million. There wasn't 10 million. There wasn't these huge, massive sell-offs. And so we watched it. It came down to about 25.60. We had moved the stop up at that point to 72.50. I had aggressively. And then when price finally went down there and tapped my stop loss at 72.50, I was out of the long trade. I had taken 50% off at 72.95, and then the other 50% was out at 72.50. So it was a good trade to the upside. Obviously didn't stretch as high as I wanted. And it would have been, obviously, in hindsight, a great opportunity to reverse trend flip there, but we did not. I wanted to wait for confirmation, which came when we actually came down and tested that $7,200 area, and we closed we close this hourly candle. And we close the hourly candle. There's going to be a lot of different names for this. Pin bar candle, I just pretty much, in my experience, here's the thing with this candle. I've never seen a candle that hunts shorts to the upside in a Bitcoin range when the overall trend is to the downside on the weekly and the monthly, that closes bearish. So a pin bar to the upside that closes bearish without a resulting significant sell-off. It just doesn't work that way. Now, classically, a stop loss hunt, which we could have had, for example, like if the next candle closed on a stop loss hunt, like if we grabbed liquidity below here and then pin barred on here as well, that would have been a better case for a trade to the upside, because stop losses, when you get kind of basically a Darth Maul like that, where you hunt stops to the, you hunt short stops and then you hunt long stops, typically price will then move pretty volatilely, actually, in the direction of the original of the first stop hunt, because you have to think psychologically here. But we didn't get this price structure, we didn't get this candlestick structure, but price shorts were hunted, so shorts were pushed out of their positions. We saw a lot of short liquidations, which we can see over on BitMEX stats too, by the way. But we can kind of scroll back and look. Here's the original short liquidations that rolled in. I want to say about 2 to 3 million short liquidations. Maybe not that many. Maybe about 2. Maybe about 2 million. Maybe about 2 million. And then we can see the long liquidations that followed that on the resulting sell-off. But that's not really the long hunt. Those are just individuals that FOMO'd in at the top. That's their stop losses getting triggered here. This is the stop losses, the individuals that position size either on the dip or in the previous range around 7,200. So basically individuals that were going long at this level that did not take profit and just had their hard stops triggered down here around 7,150. So roughly in the same range where I would have had mine originally anyways. You can actually see on the movement down to 7,149. That's when the first kind of wave of long liquidations does roll in. So again, people positioning, having pretty much the same original idea as me with my long setup, but not watching order flow and not being able to shift dynamically. So a moment of silence for them. And so if you sweep liquidity to the upside, if you sweep the stops, if you hunt the stops of shorts and then you hunt the stops of longs, well, psychologically that would tend to mean that you wanted to capture people into FOMO longs, crash them out, grab their liquidity, and then take price long. That's typically how that would go. But we didn't get that hunt to the downside. We just got, a fully bearish engulfing candle, actually a Wadatar explosion powerful sell signal, parallax reflipping bearish after a brief foray into bullishness on this candle. But again, you wouldn't have taken that because it did close bearish on this pin bar. And a strong close with really good volume, I mean, the bearish volume pouring in here, and that's going to have follow through. And we're already seeing the initial wave of the follow through. So 72.11. Yeah. So currently short from 72.11 is where I'm positioned right now. And if we now kind of zoom out the chart, we only have really 2 targets to the downside. I can posit a third, which is basically where we're at right now. We're currently at 71.19. So basically kind of this area right here, this former block of liquidity. Now we've consolidated here quite a bit and we've bounced from here quite a bit. I don't think that the bounce is likely to happen here though. So again, looking, if you want to be really risk averse, you want to pull some profits off, so, right around here, around the $7,000 range, if you got in at 7,200, is not a bad idea. That's not what I'm going to do, because I do believe in the follow through of this bearish movement. And if I'm wrong on this, then I'll just be wrong. I have my stop loss at 72.60. So if I'm wrong on that, then I'll just be wrong on that trade and then probably look to take, God forbid I say momentum long trade. That just means FOMO. But if the order flow is extremely powerful to the upside after a short stop, and if this reverses back up to around the $7,200 range and doesn't reject on high selling pressure, then this will be a stop loss to the downside. And then I'd be wanting to take price to the upside. But that, again, I don't see that yet. And I doubt that I will see that. It's much more likely that this just does continue to the downside, unfortunately for the bulls, which really only gives us, utilizing VPSV, really only gives us a couple targets here. The $6,900 region right here, and this untapped point of control that is generated. I believe this is the 17th, all the way back at the 17th, 66.59. Now going to daily volatility expander and taking off VPSV, so that's volume profile targets. If we take volatility expander en route. This does kind of give a little bit more credence, gives us a little bit of a of nuance here because we have the lower boundary coming in at 70.21. This is on Coinbase. So excuse me. Earlier I was saying right around here, and we're currently around 7,100. So no, you need to wait for the $7,000 region. The $7,100 region, I think, would be taking profit too early. So let me just clarify on that. And over here on Bybit, we can see again 70.19, 70.21 on Coinbase, 70.19 on Bybit. So that's going to be the lower boundary of the volatility expander. This is very similar to Bollinger Bands. It works very, very well. It's a reversion of the mean strategy. It works very well in ranging markets. And we would look for, again, on the daily, we don't have a sell signal. We don't have a daily sell signal yet on the daily. And I would like to see that daily sell signal closing the daily below the lower boundary of this. We are closing below the baseline, of course. Let me make sure I did set this to, the 20 Hall MA. So we have closed below the baseline. And so shorts are in order. One can be looking for shorts on LTFs. Minx is bearish as well. CCI Dynamic is bearish as well. And Parallax will be flipping bearish on today's daily close, I do believe. It is not yet. Maybe another $50 to the downside, and we'll be flipping to the downside on Parallax as well. Wadatar Explosion, of course, has you out of longs. It's had you in potential longs all the way back since the Jericho candle on the 17th of December, capturing this movement, being able to capture some of these movements right here. But overall, bullish volatility is now drained out. It's going to be similar to something like average directional index or directional movement index, to be quite honest with you, DMI. But other than that, pretty exciting day in the market. Pretty active day for us. Pretty active day for us on Bybit, to be quite honest. Taking profit on the long, getting positioned into the short. And I'm not going to lie, when we were right here, this is the 30-minute chart. Take out volatility expander. When we were right here, I saw an $8 million market buy come in on the order books. And I had the idea to faff around a little bit. I was like, okay, this is going to be a stop hunt to the downside, especially after this candle. But I didn't, stuck to my guns. It's very, very easy. It's very easy to just default, when I've been trading for a long time, to just, you always have those thoughts if you're sitting there actively watching the books. The difference is do you take action? You obviously entertain the idea. And you kind of get that desire to play around a little bit. You're like, man, I could catch the best reversal possible right here. But there was no follow through on that volume. And so it's just very easy. Once you've set a trade, unless, clearly define out what your rules are for invalidating that trade and what you would do to flip. And even though this was a very profitable, actually the last week has been fantastically profitable for me on trading Bitcoin because I have been utilizing some data metrics like order flow and tensor charts, looking at the books. Basically, again, this is not price action trading. I want to be very clear about that. It's order flow trading. Okay. Although it's been very, very profitable for me and the members over the last week, when it comes to things like I just talked about, when it comes to like flipping suddenly in direction, I'm generally not going to recommend that for individuals who don't, who are struggling, who are generally struggling anyways with discipline, with psychological discipline in their trading. It's something that more often than not can get you into trouble. And just because you see it work for me here on this individual trade does not mean it's the best thing to do. Generally, in general, though, it's better to just be wrong, have your stop loss hit. I know that sounds counterintuitive, but if you've been trading for less than 2 years, you almost never want to go against your original trade idea. You should be generating trade ideas not based on fancy or flight or some random idea or this or that, or even order flow, unless you're specifically taking advantage of order flow and you're good at it. And you've studied it and you've back tested a strategy that takes advantage of order flow. But for the most part, most traders that I meet in their first 2 years still are working on discipline, still are working on having a very firm foundation of their trading. And I think that if you receive the right education and you have the right support community, I think that progress can happen a lot faster and everybody is going to mature and grow at different levels. But generally, it's better to train yourself to allow your trade to be wrong, right? So this is something that I get from newer students. They ask me, they're like, well, if you think that this trade might not work out, why don't you exit the trade? I'm like, because that would be undisciplined. It would be undisciplined trading behavior. And I need the statistics for bad trades so that I can actually go in and change whatever is causing those bad trades. I could manage this trade right? If I decide to actively manage it. But if I actually want to change my trading strategy, what is generating my trade signals in the first place, then I need to allow my trading strategy to be wrong when it's wrong and right when it's right. And the only way that can happen is if you just set a trade and walk away from the computer, which I think is another thing that people really like about trading with us. All right, so let's go to Jonathan W says, the bottom's in? What bottom? All right. Wally, man, I saw... Holy... Jeez, Wally, thank you so much for the $50, my friend. One of the man, the myth, the legend, man. Shout out to you and Gunbot University. Wally, I hope you're doing fantastic today. He says, smash it a like and started the new year right. Here's a small portion of my positive trades thanks to cracking cryptocurrency. Call it a tithe if you want. Learn, earn, and don't get burned. Thank you so much, man. Inspiration of the rest of us. Thank you so much for your generous contribution. And I hope you are crushing it. Happy New Year's to you and your family, my friend. Hope to see you soon. All right. Caprica, Jurgen Ernst, Farbod, Tenacious V, Crypto Jack, Dark Rico, Blockchain Gains, Audrey, Mastash. Hopefully you guys are doing fantastic. Happy New Year's to you as well, Jap. Jonathan W says, didn't FOMO in this time. Progress being made. Credit to this channel for sure. Thank you, my friend. Thank you, Wally. All right. With that being said, let's zoom out a little bit. That's enough kind of for the intraday there. Let's zoom out a little bit and briefly glance at the weekly here for, let's go over to Coinbase as we are wont to do. Nothing's really changed here on the weekly. In between two, again, pretty range bound on Bitcoin. And again, we don't always want to utilize order flow trading or look for things like reversion to the mean or even reversals, which, as you guys can see, I don't actively trade reversals. I trade confirmation. Order flow can allow me to trade reversion to the mean or allow me to get confirmation on lower time frames, but I don't like trading reversals. I don't like calling tops and bottoms, right? So for example, with that trade that I just detailed, price came down to a median, consolidated there as gamma decayed, i.e. volatility decayed, and then it broke to the upside, right, on and gave me a good signal on Wadatar explosion and Parallax, and then order flow backed that up. There was some aggressive market buying. So I took that opportunity to increase my risk, increase my position size, actually pretty dramatically, to be quite honest with you, because of the distance to my stop loss, because I was managing risk at 3% with a very tight stop. I was able to dramatically increase my position size and pack a heck of a punch. So when I took profit at 72.95, that was quite a profitable movement for me. And then I aggressively moved my stop up to 72.50 and was out of the market at that level. And then I didn't take the reversal. I didn't go short on the top of the wick, which would have been fantastic in hindsight, but I don't like to trade like that, right? Very, very rarely will I look to take reversal trades. It's very rare. I do take some discretionary reversal trades, but that's typically going to be on long swing movements, right? When I really feel that something has a good potential for price appreciation and it's reached an attractive buying level. Litecoin is a good example. Litecoin is a good example for this. But I utilized order flow to give me trend confirmation to take price short at 72.11, which was helpful. But overall, on the weekly, range bound between supply, our high volume node, and our weekly 55 exponential moving average, coming in around 78.57 right now, upper range of 83.31. Definitely an area that I want to be getting short from, unless and until we happen to actually blast through that area. That's where I'll be taking my hedge off. If we blast through that area, that's where I'll be taking my short hedge off, and I'll be fully spot long on Bitcoin, and I'll feel that we've kind of come out of this in a good way, and this is a local bottom. Hash Ribbons was right. To the downside, we do have our current level of demand just in the form of a high volume node. Upper boundary of 6,600, lower boundary of 6,126. And below that, my ultimate downside target for 2019, well, it'd be 2020 now, which is going to be 4,900 with an upper range of 53.20, lower range of 49.17. So I really am kind of throwing for the lower range of that. But, you know, if price hits 5,200, okay, I'll be happy with that too. Still bearish momentum on Watertar explosion throughout this range. Still quite below. Let's actually take a look at volatility expander. Actually, we are above the weekly baseline. We'll be closing potentially back below it. Let's give it to the end of the week, of course. And lower boundary of the volatility expander on the weekly actually now coming in at 59.13. 59.13. So looking for basically a hunt or a low of this level, and I think a break of that range obviously will be short now, but would help precipitate that movement down further. And so we can see the upper boundary of that volatility expander as well at 82.27. So pretty at the upper boundary or at the upper range of overhead supply as well. So good areas there for real breakout or breakdown movements, but also pretty wide range to be trading in here, obviously on the weekly. But of course, we're not trading the weekly. And taking a look at our weekly EMAs, again, getting closer and closer and closer to that weekly baseline cross under, which is next to hash ribbons, which is kind of off the table now for the bearish scenario. Next to hash ribbons, I mean, my biggest technical indicator that I look for overall trend direction, which is the weekly 13 and 55 cross under. It's almost never been wrong, literally in Bitcoin's history. So actually hasn't been wrong ever in Bitcoin's history. So I digress because it's only happened a few times, but it's something that I've utilized on assets, on stocks, in the Forex markets, and less in the Forex markets because supply and demand doesn't exist in Forex. So and we are now just the only other thing that I'm going to point out. This is really the last bullish thing that I'll say. Earlier in one area that I have been watching is for a liquidity grab below this weekly open right here. We opened this weekly at 71.11, and a liquidity grab below that area would make sense. It would make that anybody that shorted from 7.4K feel like a golden god, kind of trap their liquidity. They'll probably be too arrogant to take profit if price does start to take profit or to exit their position short if price does start reversing dramatically from this level, because that's just unfortunately what happens to people when they see a big number in their unrealized P&L. If they don't learn how to take profit, which is another problem with newer traders, they don't know when to take profit. So that is a possibility. Getting down below that, I can kind of ease that off of my mind because the buying areas below this are quite lower and need substantially more oomph for me to be even slightly bullish. But we're not out of the, so for bears, we're not out of the woods yet. Like, things are looking good for short trades, for long-term short trades, for swing short trades, but we're not out of the woods yet, right? We're still in a daily range. Volatility is still kind of low. We're not expanding to the downside, and we don't have full-on bearish volatility yet on the higher time, well, at least on the daily, on the tradable time frame. So we're getting there. We're getting there. Almost out of the woods yet. Getting the daily to close back down below 71.11 would be really, really nice. Let's see what we get. Really want to kind of take out that weekly open. Let's see here. Kind of it. It's kind of anything. That's kind of all that I'm watching for. It's kind of all that I'm watching for. Current trade setup. Just hard stop at 72.60. And I don't really see hard stop at 72.60. If we're able to blast above 7,200, then I'll exit that trade earlier if we're able to close the hourly above 7,200. But for now, I'd like to see a retest of 7,200 and a rejection from supply now. Get the Batwing pattern going on, by the way. Yep, and here we go. We can see on this chart, this was kind of my original chart from my original short setup, which right around here, this was our first short that we caught, and then the long, or actually, first short was over here, then longed, and then we shorted, and then we longed this, and then we flipped short right here on the violation of this point of control on today's VPVR. Hashtag Batwing pattern. Andrew says, don't be stupid and get a DD tonight. All right, with that being said, man, let me know if you guys let me know if you guys have any questions. We're going to get into today's cryptocurrency segment. All right. All right, now our first story today, of course, we kind of teased that at the open here. Now, tomorrow, if all of the hubbub that we've seen all of 2019 about Craig Wright, and is he Satoshi, is he not Satoshi? Spoiler alert, no, he's not. But we do seem to have some pretty, whether by hook or by crook or by involvement with the original development, you know what? Nobody knows. That's the reality. Nobody knows. You've got, when people are kind of screaming and braying on both sides of the aisle, it becomes very difficult to locate the facts. What we do know is that he was able to convince a judge that he potentially has access to 1.1 million BTC, and according to Kleiman's estate, he also has that 1.1 million. So, keeping facts facts, which is what I like to do, Craig Wright, who of course is the self-proclaimed Satoshi Nakamoto, was ordered by a judge, if you guys are unaware of the resolution of the court case against him, he was ordered by a judge to surrender half of his near $8 billion in Bitcoin fortune to the estate of his former business partner, Dave Kleiman. That is assuming that he has actually access or can gain access to the private keys. However, in comments that he made to Bloomberg last week, and that he's made consistently, Craig says that he is unable to comply with the order to forfeit the Bitcoin, given that the cache of Bitcoin in question is locked. And Wright stated he currently does not possess the private keys to withdraw or spend against that wallet. That private key. Today, an alleged copy of an email concerning the Tulip Trust is circulating, which details the transfer of 1.1 million Bitcoins from Craig Wright to Kleiman's estate for the purpose of forming a trust, not Kleiman's estate, this is in the past, for the purpose of forming the trust, presumably this much vaunted and talked about Tulip Trust. Of particular interest is a date of January 1st, 2020, listed in here. Of course, here is the original copy right here. This is the email that is being circulated. Of particular interest is the date, January 1st, 2020, on which, quote, all Bitcoin will be returned to Dr. Wright. And to quote the original article, it says, to whom it may concern, this is carbon copied to Craig Wright. I acknowledge the trust and transfer of Bitcoins to this trust. I have full control of all software and the keys used to manage Bitcoin as of this date. This was on June 9th, 2011. It is agreed that I, Dave Kleiman, shall become the trustee for the transfer of the Satoshi I have received from Craig Wright. No record of this transaction will be filed in the United States or Australia. This transfer is valued at $100,000 for Australian tax purposes. And he received 1.1 million Bitcoin from Craig Wright of Australia at the time blah 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 blah. I will form a trust to be managed by at least 3 people, but not more than 7 at any time. All Bitcoin will be returned to Dr. Wright January 1st, 2020. Now, while many do not believe the Tulip Trust exists, or that Craig Wright will ever access this locked Bitcoin, if it is in fact true, and Craig Wright will recover those funds, it could mean that he will have access to do whatever he wants with this 1.1 million Bitcoin. That's about $8 billion worth of the cryptocurrency as of today's prices. Now, I don't think that even if he market sold all of that, I think that he would likely get a fraction of that because he would absolutely crash the market. Now, which nobody would do. You'd have to be who knows? We'll see. Unlikely, though. Now, while half of that 1.1 million Bitcoin is intended to reach the Kleinman estate, there is still a concern, obviously, here in the Bitcoin community that if this 1 million Bitcoin begins to get liquidated on any form of regular basis, it will absolutely crash the markets. And it has been dubbed the quote-unquote Satoshi dump. Though it should be noted in the Bloomberg article of note, Craig is quoted as saying that he will not dump the Bitcoin. Says, I do not intend to dump my family's Bitcoin, as some people suspect me of, as this would hurt many people in the industry. Keep in mind, this is coming from the same person who has talked poisonously and venomously about Bitcoin Core in the first place in the past. He did kind of create his own protocol. So, in the form of BSV, interesting business partners also. But I digress. In court, Craig argued that the January 1st, 2020 trigger event will not grant him direct access to the Tulip Trust funds, but rather just the control of an encrypted file, which is said to contain the participants of the trust or the trust participants and their private keys, which was encrypted using a version of Shamir's secret sharing algorithm, which is possible. Now, while Wright has claimed he is expecting to take delivery of some or all of the keys via the unnamed bonded courier dispatched by the Seychelles-based Tulip Trust, I know I said that wrong. He also stated that, quote, the process might take a while and that there is no guarantee that this most important information will arrive, which would enable him to access the Bitcoin in the first place. Now, the judge in this case, it should be noted, found, quote, clear and convincing evidence that this file doesn't actually exist and that Wright's testimony was, in fact, intentionally false. So according to the judge in the own case, Wright's full of crap. Now, critics have pointed out that there are no blockchain records showing that a trust with 1.1 million Bitcoins was created in Bitcoin's early days. Others, however, point out that Wright has claimed to use Bitcoin's nlock time function, hashlock time function, along with smart contract scripts to create the trust, which is not theoretically impossible. Now, so kind of the argument here is many people, including the judge of the case and myself, don't believe that this Tulip Trust even exists. Others think that the Bitcoin, the 1.1 million Bitcoin, is in fact locked in a scripted time delay contract, and that this dormant Bitcoin is just waiting for a trigger event or a certain block in the future to be activated, moved, and to form the actual Tulip Trust. Convoluted tale, without a doubt. Convoluted tale, no doubt. So I think that largely it is highly improbable that this Tulip Trust exists. However, I do just want to say that it is not theoretically impossible for it to, right? I think that Craig Wright's story and Craig Wright himself are ridiculous, fraudulent, false, and over the top with their lies. But I just want to, state from a matter of technical perspective here that the idea that from the early days of Bitcoin, that an nlock time function or a hashlock time function is not impossible. It's not impossible. It could be there. It could exist. I think that it's just highly unlikely. And it just seems like, again, just another, I just, some of these things just baffle me. Like, how can you get yourself, what kind of, and I guess I don't want to go too far with my comments on that, but it just seems like it's an interesting type of individual that can insert himself into one of the greatest mysteries that we have, which is who is Satoshi Nakamoto of the modern era, and just managed to take it so far that he ends up in court, and the stories become more and more and more convoluted and more ridiculous, and become fodder for, shows like this and other shows to just speculate about. I just wanted to bring this to you because this is important. Kind of interested to what you guys think. This is a bifurcating and controversial subject because you do have people that do support Bitcoin SV and Bitcoin and Craig Wright on one hand, and I know some of them watch this channel, and I forgive them. And then you have individuals. You have individual on all sides of the aisle. My personal take on this is that the Tulip Trust is highly unlikely to exist. I think Mr. Wright is just had dug himself deeply into a corner, and because you can always come up with jargon or reasons why these things won't happen. I think all we need to do is point to. I think all we need to do is just look at the transcript of the court event of the trial court. Where the judge himself found that Craig Wright was lying and that there is no such thing as a Tulip Trust. So And although it is not technically impossible that it does exist, it is theoretically possible that it could have been done. It's just so unlikely that it requires a lot of credulity to accept this kind of narrative. But we'll see. We'll see tomorrow. Watch the blockchain, guys. You see a million blockchain move, remember that you can always hedge up on Bybit. Link in the description below. All right. So let me know what you guys' thoughts and opinions are on this in the comments section down below. We'll randomly pick somebody to win the crypto comment giveaway tomorrow on New Year's Eve. Now, over to our friends in the industry. CNBC. Thank you so much. Facebook's Libra cryptocurrency project has failed in its current form, says the Swiss president. Now, as we have been reporting in our ongoing coverage of the Libra digital currency, the project was setting up in what seemed to be a regulation-friendly Switzerland. But would now seem, however, that Swiss regulators, or at least their opinion on Libra, has soured, claiming that the project is not as strong as it once was or should be. In comments made on Swiss TV, I'm probably going to mispronounce that, Ueli Maurer, who is Switzerland's finance minister and outgoing president, says that Libra is something of a failure in its present state, and he does not believe that it can change the monetary system as it is. He also said that it needs, quote, a lot of reworking if it's ever going to get off the ground. And specifically, according to him, quote, I don't think that Libra has a chance in its current form because central banks will not accept the basket of currencies underpinning it. The project in this form has thus failed, end quote. Now, this is obviously in reference to Libra's status as a stablecoin, with its current fiat-backed design intended to peg to a basket of international currencies, including the euro and the Singapore dollar. It is said to be too challenging for regulators to consider governing this kind of basket case, pun intended, of currencies. Now, the Libra digital currency, which was planned to be issued and governed by the Geneva-based Libra Association, has obviously seen a lot of concerns raised by regulators and politicians alike, citing matters of privacy, to name a few, to its potential to disrupt monetary policy and unpredictably change the global financial landscape. And over the past 6 months, scrutiny over Libra has only mounted, going so far as seeing Zuckerberg himself getting grilled by Congress over Facebook's role in the entire project. Now, Zuckerberg insisted that he doesn't control Libra, and he went even so far as to withdraw Facebook from the Libra Association. That has done little to smooth over the objections by the ruling class to tech companies entering the financial space. And interestingly enough, we're kind of seeing, in my opinion, this kind of associates with what we've been talking about for the last few days with the kind of Google crypto crackdown. We're kind of seeing all of this. We're kind of seeing the negative effects of what happens when the idea of cryptocurrency pokes its head out significantly into the limelight. And I think we may be dealing with the first initial backlash right now. And the decisions that we make now in this moment are really important as to what the future in the short term of the space will be. Because as I've said many, many times, decentralized currencies and decentralized systems make better sense. They're technically better than central points of failure, central points of authority, not only from a technological standpoint, but also from a philosophical standpoint. They're just better. They're better for human dignity. They're better for human liberty. They're also just better functioning systems in general. They're in their infancy. They're in their early stages. And so pushback from the establishment, pushback from the financial system, from the established monetary system, from the traditional banking system, from the traditional governance system that we have instituted in the form of governments, these things are naturally going to push back. That doesn't stop the long-term trajectory of things like Bitcoin. But our decisions and actions can, of course, affect the short-term trajectory or kind of the volatility, let's say, of how we respond to these things. So, being involved is extremely important. Let me know your guys' thoughts and opinions on this. Do you guys abjectly hate Libra? Do you guys think that Libra, Bitcoin, and fiat currency can coexist, as I think some people do? Overall, I think my takeaway on this is that, Libra has, I've said this from the beginning, Libra has the potential to be a threat and be successful if they comply with government regulation, but government is unlikely to let, and central banks are unlikely to let them pass without, with a pass, unless, the big tech companies want to wage war against the traditional financial institution, without basically letting the traditional banking system co-opt the digital currency, which we'll see if they're willing or unwilling to do. And I think that'll dictate and determine their long-term success, because unlike Bitcoin, they don't have the ability to kind of go in the shadows to develop. So unfortunately, like I said, big tech attempts at this whole cryptocurrency thing may or may not work out if they're not willing to play ball with the central banks. But definitely let me know your guys' thoughts on this. Now, our final story of the day is going to be coming to us from Bitcoin News. We're going to be talking about China, as we do. Now, China does appear to be speeding ahead with its blockchain adoption. Now, over here in America, we've been screaming ETF for eons, but over in China, the Shenzhen Stock Exchange is going to be releasing its Blockchain 50 Index, which aims to track the top 50 firms by market cap in the blockchain industry. So a little different. This is, this is a pretty big step over there for the financial markets of Asia. Not quite what we wanted over here in America. Now, the Shenzhen Stock Exchange is the 8th largest exchange in the world and the 4th largest on the Asian continent. Therefore, this is no small achievement that a blockchain index is coming online, which includes some of the leading Chinese upstarts in the blockchain space, such as WholeEasy, Ping An Bank, and Zixin Pharmaceuticals, to name just a few. Curiously, though, on the same day that the Blockchain 50 Index was announced, a Chinese finance firm filed an application for a blockchain-based exchange-traded fund. Now, let's see. So we've got Peng Ao Fund. This is a Shenzhen-based fund management firm. They filed an application dubbed the Peng Ao Shenzhen Stocks Blockchain ETF, which was submitted to the China Securities Regulatory Commission, the CSRC, kind of China's SEC. Not kind of, the Chinese SEC, the main regulator of the securities industry in the country. Now, according to the Shanghai Securities Journal, the SSJ, the approval of the ETF would mark it as the first company to launch a blockchain ETF in the country, which will help in tracking the operations of publicly listed stocks from blockchain-based companies. The SSJ has also stated that if this proposal gets approved, it will pave the way for other firms to file their own proposals for blockchain-based ETFs. Quoting, the industry believes that with the landing of such fund products in the future, it will provide investors with a new way to share in the development dividend of the blockchain industry. So just to kind of wrap that up neatly for you guys, it's not a Bitcoin ETF, all right? They're not going to publicly list a Bitcoin ETF on their stock exchange. This is, however, an index of blockchain-based companies. So this is still leaps and bounds beyond what America is willing to do in the form of traditional finance, in the form of traditional securities and assets that investors can get their hands on. And I actually think this is quite a good thing, especially for retail investors. This is an opportunity for individuals to get exposure to the growth of the blockchain industry in its commercial form, which I think that if individuals are just only focusing on just the raw cryptocurrency in terms of investment, right? I understand I have a lot of friends and myself as well who are also invested in Bitcoin or beyond just the investment, beyond just the financial gain, and that's fine. Beyond just the financial turn, that's fine. But as an investor, to ignore the commercial development of the blockchain industry in totality, I think is ludicrous. As I've said many times, I'm an investor in the two, SEC-approved Regulation A+ blockchain startups that have listed here in the United States, or that have launched here in the United States. I've invested in a UK. I am an accredited investor for these projects, so I have the ability to do that. I didn't try my hand extensively a lot of ICOs, although I did. I trade altcoins. That's fine. I don't have a lot of altcoin investments. I do have a few, but I have a pretty well-sized dividend stock portfolio. I'm a big believer in investing in traditional instruments and utilizing traditional instruments. Probably one thing that I'll be going back to next year, whether it's going to be Forex, but I'm also going to consider adding options trading to my repertoire as well. These are all things that I think a well-diversified approach to this space merits. And I think that individuals who embrace and encompass multiple approaches to the same goal, diversifying your portfolio and diversifying your investments, or at least entertaining the idea of investing in commercial blockchain startups while either investing or trading or whatever you want to do with the raw cryptocurrency, I think is the way to go. But having said that, although China does continue to stick to its anti-crypto stance officially, President Xi's endorsement of blockchain has led many Chinese firms to become part of the blockchain space. Over 500 blockchain projects have already been registered by the Cyber Administration of China. So potentially the next dot-com bubble of the next decade. But when the dot-com bubble started, got a way to go. So I don't think that we're any sort of like blockchain bubble. In fact, I think that we might be at the beginning of what might eventually become a blockchain bubble. So plenty of time left before it. I think this is just the beginning, to be quite honest with you. And I think that those who don't have their eyes on the horizon are going to be kind of left in the cold. Right, left in the cold, unfortunately, on this one. And as an American or as anybody, there are ways to gain access. There are ways to gain access to these. Like just because it's the Chinese stock exchange doesn't mean you have no ability to gain exposure to these markets. Okay, do some research. All right. With that being said, it's 12:57. We're going to take a break, and when we come back, we're going to answer questions and maybe look at some of your chart requests. Depends on how much time we have, guys. So let's check the. Open the crate. Open the crate. I'll open the crate after the break, my friend. I promise. Hopefully you guys are doing fantastic. I got a little bit of a bullish pin bar on Bitcoin right now on some decent volume. I'm not going to lie. On some decent volume. Let's go look at the trade aggregator. Yeah, it's cool. We already talked about this. No flip-flopping, ladies and gentlemen. Don't really see anything in here. Dictate flow. See how price responds if and at 7,200. See if we get back up there. See when the next wave of sellers steps in. Looking over at something like tensor charts. What do we see here? We haven't really seen a big flash of the historical book since 7,200 and the initial rejection of the sell-off. Right now we can see that the book's fattened up around 7,100 and getting a little granular here. I like that. I think that is distracting. Yeah, currently they've spread the sell wall from 72 to 75. We kind of got to wait for a volatile movement for it to move down. Jonathan says, you know what, we got to take the break. Sorry, Jonathan, I'll answer that as soon as I come back, my friend. Whipping me into shape over here on a timer. We'll be right back, guys.
This is Jason when he first learned about Bitcoin margin trading on BitMEX.
Why? Why? Give it back! Give it back! Oh, give it back!
This is Jason 6 months later after signing up for Bybit with the Cracking Cryptocurrency referral link found in the description below. Don't make the same mistake as Jason. Sign up today at bybit.crackingcryptocurrency.com.
Hey guys, thanks for holding through the break. How are we doing? All right. So let's see here. A little bit of a bullish pin bar currently being sold into. as we speak. The volume delta about -7. Pretty decent. Pretty decent. You can see massive orders come in. About 2.5 million off of this current high, which is exactly what we want to see for a bearish downtrend. We want to see every rally get sold into. Okay, let me look and see what I got for questions today. All right. Danny L asked Justin, where do I watch the order flow aggr.trade? I believe Ben linked you to that. Let's see here. Jonathan W. Okay. Does it look like a bear flag / consolidation on the weekly Bitcoin Coinbase chart? Therefore, possible dump to ensue. Yeah. I mean, that would be a classical view of it. I think, you know, looking at something like the analysis of Da Vinci, who's really stuck to the daily. He's kind of focused on the head and shoulders or the larger inverted head and shoulders that we're currently in. Neither has been validated, so this is largely a no trade zone for him. However, his head and shoulders short did activate this morning. Let's see here. But yeah, this is exactly what this looks like. This looks like a bearish downtrend, sideways consolidation, and symmetrical movement. And a break out of that symmetrical movement in the direction of the previous trend is classical chart patterns. This is going to be a bearish consolidation to the downside with potential to the downside. Typically, the first if this boundary is violated to the upside, so if you break out from this area, typically that's going to be an opportunity to get to sell into. And again, we can kind of see the target area for that. Also, this weekly order block right here, and also overhead supply and the weekly 55 EMA. I think that looking at the market like this is fine. That's well in shape with overall. You know, so I don't necessarily look at that as a factor in my analysis. Of course, that is what it seems to be when we're looking at it subjectively through the form of like chart patterns or the way that price moves in patterns. For me, I just look at price stuck between two HVNs. I wait for my daily signals and I look at the overall trend on the weekly and monthly, which is to the downside. That's the direction that I overall want to be trading. But yes, I mean, you can just see it. Tight consolidation. You can see volatility dropping down. You can see parallax, just weekly bearish trend remaining. You never did quite reach oversold. We have a little bit of weekly div, but no follow through insofar. I mean, this, you know, on the weekly, we really need to get a decisive movement. I mean, this has been in a bearish trend. Parallax called the bearish trend since here, and we've had, you know, several months of follow through now on that bearish trend. It's likely that we get several months more just as we look at the rise to the upside. This still does leave us, for the overall macro bullish case, good opportunity to form a higher low, you know, on the monthly and on the yearly, God forbid, and be set up for a nice run either in 2020 or in 2021, 2022, whenever that tends to happen. But Moonshine Fuel says, never talk politics during the holidays with family. Yeah, maybe sometimes never talk politics during the live stream. Ken asked if I watched the close on Friday of the price of SIBA. Did not, sir, but let's take a look at ZAG. Looking good. Yeah, we got a good old classic. Parallax flipped us along here. Good old classic breakout, long trending signal right here on good volume and volatility. Very beautiful trade right there. Let's see here. One could have taken the reversal right here on this candle from Parallax recovering from oversold. Typically a take profit. So I prefer to use that as taking profit on shorts. And I don't typically utilize these for, let's actually pull up my volatilities. Yeah, unfortunately, this doesn't look good on today's daily, though. And we'll see. Let this consolidate at this upper level and see what kind of break movement we get. This pin bar I don't really like, though. Especially on overall falling volume. Falling volume in an uptrend is not a good thing. And falling volume in a downtrend is bearish. So overall, I actually don't think that's a good thing. I don't think that's very bullish for silver right now. You know, and in fact, from the perspective of PTP, here, and all three take profits would have been hit from the long signal on PTP. So one should be out of this trade and looking for continuation anyways. And I think applying a little bit of discretion, looking at the falling volume in an overall downtrend, this most likely represents a shorting opportunity. Andrew says, if y'all are going to start trading options this year, start tweaking your algo sets. Things are a bit different. Nothing about PTP is how I would trade options. Oh, open the chest. My bad, brothers. Let's distribute these rewards over there on DLive. Counting down. Congratulations in advance. Big winners, big winners, big winners, big winners. Basically, my option strategies are just to get premium for the most part. It's my approach to options is passive income. Low risk, premium. Low risk, take premium. Low risk, take premium. Jack says, if you boil down Libra, it is their formula for a stablecoin, a fiat basket that scares central banks. Maybe they're worried that when the Libra bank starts weighting different currencies and trading against them, it becomes very inconvenient to their existing fiat system. Absolutely. Happy New Year's, Andrew. He says, expand yourself in different markets and may your health, wealth, and wisdom always grow exponentially. Whoop some keister. MervinSkidmore says, Tomo, my bot missed the sell, and now I have a great big bag of the stuff at negative 30%. Should I stick with it or take the loss? Probably going to tell you to take the loss, just right off the bat. Hey, Malicious, good to see you, man. Thank you for the background. Thank you for the background compliment, my friend. All the best to you, you go chill. We got ETH1, Ricky T, and Wendy 2 coming in with the big wins. Over there on DLive. Oh, yeah. So, yeah, closing at 1776. I believe that's the most significant thing of the year. Go look at Tomo. Oh, hey, what's up, baby? What goes up must come down. Okay. So here's the thing about Tomo. I'm not. You know, I'm just gonna give you my advice. This is not. Just gonna give you my direct advice as to what I do with Tomo. If I had Tomo right now, I would sell it. Right. So what you decide to do is going to depend on your approach to Tomo. Right. If you were holding it, if you're holding Tomo because you think it's going to be a long-term investment, then probably don't do anything with it. That's terrible. That's terrible investment activity right there. If you want to sell off of the first pump. For me, I look at altcoins a little differently. I look at trend. So Tomo has no support. There's no price data. There's no price history. There's almost nothing to go off of except for the breakout initiation zone, which is all the way down at 50.41. Which is another 18% to the downside, about 17.35% to the downside, depends on where you measure. But here's the thing. When things are in a downtrend, especially altcoins, support tends to be fairly fabricated, right? It turns around when it turns around, and you can identify important areas. You can identify areas that are more likely than not to be potential targets, but I don't like trading reversals for this very same reason. I like targeting those areas as take profit areas or exit areas. I like entering into trends as they are confirming. And then I just trade with order flow as long as the trend continues. I think that Tomo, a couple of our analysts made a lot of money off of Tomo trading it over the last few months. Over the last month, I should just say. But it's not something that I took part in particularly. I didn't catch Tomo. And I don't see anything here that would incentivize me to hold this for a recovery. Don't be mad at me if you sell and then it skyrockets tomorrow. These things happen. But looking at this and trying to be as objectively as I can, I don't like to hold things that are in a clear downtrend, strong downtrend. These pullbacks make a little bit more sense. These pullbacks make a little bit more sense because the trend is to the upside and it's a trend that is quickly corrected and pops to the upside. But we have falling volume in a downtrend, which is not a bullish thing. If we saw rising volume in a downtrend, that would be a different thing. And very similarly here, we saw rising volume in an uptrend, which is a great thing. And then once we started seeing falling volume, we distributed and fell. And that snap trend. I don't see anything here. There's no data. A signal or just another quinky dink? I mean, I don't know. Humans have the capacity to try and find patterns and meaning in things that don't have any. We'll see if the Patriots rise again. Looking at the broader market today, we've got Horizon, Made Safe, and BCN Bytecoin, I do believe. Yeah, gonna bite that coin. Pundi X up a little bit, Raven up a little bit. I know Da Vinci caught that one. Zerp not along for the ride. Majority of the altcoin market down today in dollar value, of course, and beginning to soar in BTC value, meaning that it just would have been more profitable to short Bitcoin than to hold most of these altcoins in general. Yeah, make sure that you guys stay safe out there. It is New Year's Eve. These wine drinking soccer moms have no respect for human life. All right, so I think with that, guys, I think it's time to sign off for the last time in 2019. We'll be coming to you from the future in the next episode. Hey, guys, thank you so much for joining me for another exciting episode of Breaking Bitcoin. I've been your host, Justin Wise. It is New Year's Eve, the last day of 2019. Go out there, have some fun, especially with your friends and family. Be responsible, be safe. We've got a beautiful year of 2020 ahead of us. Markets to conquer, profit to take, lessons to learn, and something that I want to impart to you guys before we leave. If you guys haven't done this already, remember, you can live your life one of two ways. You can live your life indulgently, or you can live your life by structure and discipline. And I highly advocate for the latter, because that is what's allowed me to achieve the modicum of success that I have in my life as well. Again, I've had my struggles with many, many, many things in my life, but it is through structure and discipline that I've been able to change, because discipline equals freedom. Once you have the ability to begin mastering the things that you want, once you realize that you can be in control of what you eat, of what you think, of what you say, of what you drink, of the friends that you keep, of the company that you keep, of the decisions that you make, and you refuse to be blown around like an inert chunk of matter by the winds of the universe, you take control of your destiny, you take control of your life, then things begin changing significantly. So I encourage you to do that. Do you have an option tonight? You know, and again, you guys go out and have a good time, okay? But also sit down and write the lessons that you've learned in 2019 and make plans for 2020. You can't get anything done without a plan. The best laid plans of mice and men, they say. Well, that is a lie, and kind of an overrated book. Good story, but kind of an overrated book. Because the reality is that only when you begin putting pen to paper and devising the plan, you actually have the action, the inertia, the velocity to actually achieve anything that you've written down on paper. The idea that, oh, I'm going to do this later, but you don't write anything down and you don't make any concrete plans and you don't hold yourself accountable to anything, that's what's going to keep pushing you back down and pushing you back down. Everybody has good intentions. Everybody in the world has good intentions. But good intentions are nothing to the overwhelming crush of words are failing me. Come on. Entropy. The universe tends toward entropy, right? And so do your own choices and behavior, right? Which just means that if you do not actually hold yourself accountable to change, then you will just decay into entropy, right? Your own gamma will decay and your theta will decay as well, okay? So this is true in trading. This is true in life. Make a plan to change. Change the things about yourself that you know need changing, because you can do it. You can do it. Tomorrow, we're going to be coming to you from the future. Everything is within your grasp. You know, the success in trading that you want is within your grasp. The success in life that you want is within your grasp. But if you don't sit down and do the work, it'll never happen, right? There are maybe 5 people on planet Earth that good things just happen to just because. And the rest of us, we got to work for it. So make 2020 the year of work, guys. Get out there and hustle. Get out there and grind, because it can be yours. It's been a pleasure to trade with you guys. It's been a pleasure to do the show here in 2019. Hope you guys have a very safe evening. Drive safely, drink responsibly. And I will see you guys from the future. See you guys next decade in 2020, tomorrow at noon.